Hi, it's Michelle Silverman Bedell from Silverson's Realty,
And I'm Sean Meller from Quintessential Mortgage Group.
and today we are going to be speaking about the foreign buyer and what is available to them if they want to buy property, and also buying investment properties and what's available to an investor. So I'll turn it over to Sean.
All right, thanks, Michelle. I appreciate that. So it's good to be with you. So let's just first define what a foreign national even means, because a lot of
Okay.
people don't fully understand what that means. There's basically 4 different types of residency. So you're either a U.S. citizen,
Right.
or you're a green card holder, meaning that
Right.
you have the right to come and go as a U.S. resident.
Okay.
Or you're a non-permanent resident alien, which means that you have residency rights, but they're limited. You have a visa that's that's temporary, that
Okay.
can convert. And then you have a true foreign national. A true foreign national really is someone who has no residency in the United States at
Okay.
all. They have the ability to purchase property here, to come and go essentially as tourists,
Right.
but they don't really technically have residency here, and they
Right.
certainly don't have any work permit here as well.
Okay.
So very few lenders actually work with true foreign nationals.
Correct.
Most lenders that you speak to when you talk about a foreign national, they're thinking about a non-permanent resident alien, someone who's got a work visa, not a U.S. citizen,
Okay.
but that's not really a foreign national. Most lenders can work with non-permanent resident aliens, but a true
Right.
foreign national is very, very limited
Okay.
in terms of the options that are available to them.
Right.
Now, on the broker side, you know, we work with multiple different lenders, and so the foreign national product set falls into what would be considered what's called a non-QM loan, which stands
Okay.
for non-qualified mortgage.
Right.
What that really means, it's fancy terminology. What it really means is that it's a loan that is not going to qualify for Fannie Mae or Freddie Mac. It's not a loan that a lender is going to be able to sell off
Okay.
to Fannie or Freddie. So it's going to be loans that are only done by certain types of lenders who have taken on the risk of working with foreign nationals.
Okay.
Now, the ideal way for a foreign national to purchase property here in the United States is typically as an investment. They can really only purchase it one of 2 ways, either as an investment or as a second home.
Oh.
Right? Why? Because
Right.
their primary home is in their home country.
Okay.
Right? So if
Right.
you're coming here, and by the way, that includes Canada. Most people don't even think about this.
Right.
But, you
No, I
if
know
you're-
that, Canada.
If you're Canadian, you're not a U.S. citizen.
That's right.
If you don't have any U.S. residency as a Canadian, you're a foreign national.
Correct.
So somebody who's coming over the border from Toronto or Montreal, who's looking to buy a house here in New York or anywhere in the United States, is going to be purchasing that property even as a foreign national.
Okay.
And the way that they would do that is to do it either as an investment purchase or as a second home,
Okay.
with their primary home, of course, being in their
Canada.
home country. Let's say,
Right.
for example, in Canada.
Okay, interesting. So go through the process for a foreign national of obtaining a loan what product exactly would you be offering?
Sure. So the easiest product that I've used with foreign nationals
Yeah.
is it's called a debt service coverage ratio product, or DSCR for short.
Okay.
It's becoming a very popular product.
Right.
It's something that more and more lenders are actually starting to offer.
Okay.
What it is essentially is a sort of a quasi-commercial type of a loan,
Right.
because it can only apply to investment properties. So
okay.
and the reason for that is because it's reduced documentation based on the property's income generation itself.
Right.
Right. So what the lender is looking at purely are a couple of things. A, they're looking at the appraisal to
Right.
determine 2 things. The value, of course.
Correct.
Right? That's always the case with an appraisal. But just as importantly, the appraiser's determination of the market rent for that property.
Correct, their income.
Those are the two components we're looking at in the appraisal. That's not something that you're typically looking at for any other normal. So if you're buying a property as a primary residence,
right.
we don't care about what the market rent is.
Correct.
In this case, we're specifically requesting the appraiser to do an analysis of the market rent for that specific property. And that market rent is the actual income number that's then used by the underwriter. They're not using any other income at all. So if the foreign national has a complicated situation, if they,
Right.
as you know, right, it's not going to be the same thing as in the U.S. where they have W-2s,
Right, they're coming in.
or getting, tax returns might be complicated, or they may have to be translated, etc. Right? This is a very clean, easy way to do it, because all we care about is what the appraiser is determining for income
right.
off the property. And no other expenses other than the expenses for the property do we care about either. So if the foreign national owns property
Right.
in their home country,
Right.
or they have other liabilities or expenses, we don't care about any of that. All we care about are the expenses associated with the property for the mortgage. So that could be interest only, by the way.
Oh,
so it could be
okay.
purely interest,
Yeah.
plus taxes, insurance, and of course, if it applies, common charges.
Okay, so you're not concerned, or when you're evaluating their package, how much they owe on their property in Canada or?
Not at all. It
Interesting.
does not factor into the equation in any way. They're only looking at, again, think of it like a commercial loan.
Correct.
Right? They're looking really only at the property's ability to sustain itself. Now, there are different ways that lenders will calculate how they'll qualify.
Right.
Some lenders are going to be very strict, and they're going to stick to debt service coverage ratio. Let me explain first what debt service coverage ratio actually means. So most people in the real estate world understand the term debt to income ratio.
Correct.
Right? Debt to income is very straightforward. It's the amount of debt that you're carrying as a percentage of your income on a monthly basis, and that is the ratio that underwriters are using to determine your eligibility. Debt service coverage ratio is literally just the flip of those two numbers. It is the income over the debt. That's all that
Okay.
is. So, and if the number is greater than 1, it means that you are profitable. It means that you're in the black.
Right.
If the number is below 1, it
Right.
means you're unprofitable,
Right.
you're losing
Right.
money, you're in the red.
Right.
Most lenders are going to require that that number is profitable, that is above 1.
Well,
right?
of course, yeah.
1.25
Right.
is the sort of the standard for most commercial lenders, for example. But there are lenders that will allow that debt service coverage ratio to fall below 1. And there are some lenders who I work with that
Right.
will even allow that number to fall literally to 0. When that's the case, as you go from being profitable to being unprofitable,
Right.
it translates into a lower maximum loan amount, into a higher down payment, and into a
So
higher
there's a way
loan.
of getting around it by putting more money down?
Exactly right.
Okay.
Exactly right. So, and generally speaking, if you have the ability to put down at least 35, maybe 40%,
Right?
you'll qualify. It's as simple as
Interesting.
that.
Interesting.
Yeah.
Very good. That's very interesting. So, and this applies to all foreign nationals, basically from any country.
So almost.
Almost?
It doesn't
Okay.
apply to country. You know, we still have to abide by the Patriot Act, and so therefore there are certain countries that,
Countries
of course,
that's not-
nationals
right.
will not qualify from.
Correct.
You know, the standard usual suspects. If you're from Iran or North Korea
Right.
or
You're not
Cuba,
gonna-
those
right.
those countries,
You're
you're not
not.
going to qualify. But pretty much every other country is going to be acceptable.
Very interesting. And this loan is also used for commercial properties or investment properties, because I have investors looking to buy.
Yes.
And this would allow them to qualify as well.
Yes,
Very
that's correct.
interesting.
Now, foreign nationals technically could also purchase property as a second home, right? So if they don't want to do it as an investment because they
Correct.
literally they intend to spend
Right.
time living in the property, they certainly can do it that way. It just means that they can't use that debt service coverage ratio product.
Right.
It
Would
means
use
that-
something else. What
Correct.
other products would you offer?
So there's a couple of other ways you can go with it. First of all, there's always going to be your standard full document product.
Right, okay.
Always, right? But that's going to be more complicated, especially if you have to get tax returns translated from a foreign language into English, right? And getting certainly CPA letters
Right,
and that sort
right,
of
right.
thing. But the by far easier way to do it is something called an asset depletion loan.
Okay. so
Asset
do it based
depletion
on
or
your
asset
assets.
utilization, right. So if you essentially have sufficient assets to qualify for conversion to income, meaning that the total assets that you have, if you take away what is necessary for the purposes of the down payment and the closing costs,
Right.
and there's going to be post-closing reserves usually as well.
Right.
If you take that away, if you have additional assets that are left over that are not needed for the transaction, those assets can be converted into income. How does that work? Different lenders do it different ways.
Okay.
Some lenders
So-
are more conservative,
Okay.
some are less conservative. The most liberal way that I have a lender that will do it
Yeah.
is they'll take your total assets that are available and they'll divide that by 60 months, 5 years, and whatever that number is, that's your income. So
Right.
if you have, let's say, for example, $1 million and you divide
Right.
that by 60 months, right, that works out to be something like, I'm not sure, $15,000 a month or something like that. That's your income that you can actually use to qualify with. You don't need any other documentation other than a couple of months worth of bank statements to show that the money has seasoned, it's been sitting there, and it's in a legitimate account. Sometimes the
Interesting.
lender may want those assets transferred into a U.S. bank account, but they can theoretically sit in a foreign account as well.
Okay, and you deal with all sorts of lenders, right? It's not just specific lenders who deal with this. I mean, is it because I know you're a mortgage broker, right, or a bank?
That's
You're not
right.
a banker, so you're not
That's
with
right.
one specific bank.
That's right.
You
I'm
can
not
take
limited.
it Well, I think that's important to say. You can take
Yeah.
these loans to different lenders,
Correct.
right? Who may be more agreeable to doing
That's right.
this kind of loan.
That's right. Different lenders will do it different ways, as I said, and so therefore, what you're looking for is a lender that's going to be able to calculate the income in a way that's going to qualify. Some lenders, even though they offer the product,
Right.
you still may not qualify because their calculation is very conservative.
Okay.
And this is the type of product where, especially if you're a foreign national, by the way, if you walk into a standard, regular, conventional bank that's on your street corner,
Right.
they're not going to be offering this. The only way they will be offering that would be if you were a private equity client, if you
Okay.
were willing to bring over
A
a
ton of
substantial
assets.
amount of money,
Right.
and then they may customize the loan for you in that way. But if you're just a run-of-the-mill client, typically walking
Right.
into a regular
Right.
bank off the street, they're not typically
They're
going
not
to offer
going to
that.
do this. How long does it take to get these loans? Does it take longer to process these loans for a foreign national than for, let's say, a U.S. citizen?
That's a great question.
I mean,
so
How quickly can you do it? Because today,
Yeah.
these transactions are going very quickly. And when you
That's right.
present an offer, most of these sellers want a quick deal.
That's right. So the DSCR loans and the asset depletion loans are loans that, by the way, don't necessarily only apply to foreign nationals. Of course, they can apply
Right.
to U.S.
Right.
citizens or green card holders or
Right.
non-permanent resident aliens as well.
Right.
Right. It is only more complicated, but for the foreign national, to the extent that you also, for the foreign national, have to get some documentation for credit.
Oh.
Right. You're not going to have
Right,
any
because you don't
credit
have
history
credit
as a
history,
foreign
right.
national. As a U.S. citizen or a green card holder or even a non-permanent
So
resident
how
alien,
does that
you
work?
typically-
I mean, that could take months, to establish credit.
It actually is very easy.
Oh.
It just can take a little bit longer because it depends on how long it takes the foreign national to get what we need. And it's
Okay.
not as simple as pulling a credit report,
Right,
which takes
right, they don't
30
have,
seconds.
right.
In their case, what they typically have to do is go to their bank
Right.
and get a letter from their bank that says, I've had a line of credit with this bank or a credit card with this bank, and to state how long that line has been
Okay.
open and that they're a customer in good standing.
Okay.
That letter can happen in a day, but it depends on
The
the
bank.
country and the bank and how long it may take them to get, and that letter may have to be translated into English. So it may take a little bit longer just for
I
that
would
reason
think
alone.
Right, okay.
But if that's the only issue
Right.
that separates or distinguishes foreign nationals from everyone else in terms of these products, because again, a DSCR, you're simply getting the appraisal and the
Right.
asset statements, and the asset depletion, you're simply getting the assets for the purposes of conversion to income. It's very quick.
Okay, so there are many ways if you're a foreign buyer, you could definitely buy a property in the U.S., right? You just have to adhere to certain rules. And there are different programs that you spoke about.
That's correct.
That you're much more knowledgeable than I am. Well, then...
I'm doing this 25 years.
Right. I'm doing real estate a lot longer, but I don't do any kind of financing.
Yeah.
So it's great that, Sean, you're able to come and that
Sure.
you could speak about it and
Absolutely.
possibly speak about some other topic in the mortgage industry on another video and
Always
another
happy to.
meeting. So we want to thank you and have a great Memorial Day.
Absolutely. Have a great Memorial Day. Thanks. Take care.
Bye-bye.
Bye-bye. Thanks so much.